Good day, trader. My name is Wasku Smart FX. Welcome to my YouTube channel. Today's video, we're talking about the weekend trade recap. So this is the moment we talks about the trade we took during the week. So we explain just took one of the trade we took during the week and explained the trade, why we took the trade, and what is the strategy used for the trade. What are the probabilities that the trade is going to work out? So we'll be looking at this particular trade here on Monday. Good. We have go sell now. Yeah, this whole trade. So we want to look at what is the strategy used for the trade and what is the probability that the trade is going to work out. Okay, this is the chart here. Before I put on the annotations, I want you to look at the chart. You can pause the video and look. If you can see what I saw or how I took the trade, if you are following me for some while now, you should be able to do what I'm doing, and yeah, that's my expectation because making all these videos is just about me trying to teach people what I know, and my expectation from teaching people what I know is that they also do what I do and even more better than me because I'm teaching them a channel. So let's go to, let me put on the annotations, pause the video, look at it yourself. Okay, this is the annotations here. This is the trade we took on Monday, but let me explain why we took the trade. So I'm going to delete everything here so we can start again and understand why we took the trade. So deleting everything now, let's go to, because don't forget one thing I said. In some of my past videos, I talked about 5 foundational level in the forex market, or before you took a trade or for any strategy. Number one is bias. You must have a bias, and your bias is what you call draw on liquidity plus direction. Number two is you must have a narrative. Number three, you must have a context. So context means that where am I trading from where to where. So you must have both draw on liquidity plus narrative. That is what is going to give you a context. So the fourth one is the entry pattern. The fifth one is the risk management. So entry pattern is as important as you looking for a context. Context is as important as you looking for a narrative. Narrative is as important as you looking for your bias. Bias is very, very important. So I don't think you can even take a trade without having a bias. Bias is just like you need to know where the liquidity is in the market before you take a trade. That's even very important. So let's go to 1 hour chart because I think that's the first place I see the old trade often. Before going to 5 minute charts. Okay, this is on Monday here. This is Monday. You can see that the market is kind of showing a bullish pattern. And the market is bullish. Every retracement, market is bullish here. Market is bullish. You can see a break here, even though it is just a weak break, or at least market breaks the structure. And you can see another breaks here. So we can see that market is, we can categorically say that market is bullish because the trend says market is bullish, right? So, but market opens with a gap here. Market opens with a gap here. Market enter into the gap, the weak open gap, but market did not take out this high. So from the video I'm making on market structure, intermediate time high, intermediate time low as an entry pattern, everybody can possibly understood that okay, now we have a shift in market structure. Market break the high, the low. This high cannot take out this high, so which means that this high is an intermediate time high. So it is a reversing pattern, which means that the bullish stopped. Then possibly now we have a bearish continuation, bearish out to begin. So this is the first fair value gap in this whole structure. One. So after market break this low, this is the fair value gap. If I want to take the intermediate, intermediate time high according to the what I explained in the market structure video. I will have put my entry here, then my stop loss here, then I will just take 1 to 2, which means that I will still be a winner if that is what I took. I will still be a winner, but that is not what we are discussing now. You can go and watch my market structure, intermediate time high, intermediate time low as an entry pattern, and you will understand why I had to take this trade as an entry. But that is not what we are talking about here. So I saw this first fair value gap, market enter into it. The moment market break this low, this fair value gap here. So the moment market break this low and create a new order flow, that is where I have to look for entry, because now I have a drawn liquidity, here. So I have a drawn liquidity, I have a narrative. This is a narrative. So and don't forget what I said. A contest area is equal to draw on liquidity plus narrative. The distance between the draw on liquidity and the narrative is what we call a contest area. So which means that inside this, from this fair value gap to this low, I am looking for sell. I want to find the selling pattern from just these little zones. That is where I'm looking for the sell. I'm trying to look for sell, at that particular zone. So I'll go down to lower time frame to look for sell. Don't forget, I start from higher time frame, at least 1 hour, to look for both narrative and draw on liquidity, which is equal to the contest area. Then the next foundational level is called the entry pattern. So I have to go down lower time frame to look for entry pattern. Because this is a 1 hour, I will go down to 5 minutes to look for entry pattern. If it is 4 hours, we go down to 15 minutes to look for entry pattern. Don't forget that. So 5 minutes to look for my entry pattern. So this is the zone I'm looking for bearish. This from this to this place. That is where I'm looking for bearish. I'm not looking for bearish any other place. It is just inside this little zone. On 1 hour it is little, but now you get to 15 minutes, 5 minutes, you can see how big it is. So let me cancel out this. Since you understood what it means to have a contest, this is the contest, this red zone is my contest. Okay, let me just draw it, let me put it this way. Let's look inside the zone now. So this is the 1 hour fair value gap. So the what next is my entry pattern, and let me just draw out an entry pattern so that we all will not get ourselves confused here, so that everybody will be on the same zone with me. So entry pattern is when we are bullish. Then if I want to look for a reversing pattern, I have to see market taking out a liquidity, market breaking this structure, enter a fair value gap and go down. So that is a good entry pattern. Or I make use of market being bullish, then I make use of what I call the intermediate time high, or even on lower time frame. Yes, I can still look for intermediate time high, the market sell. So which means that this is an intermediate time high, the market sell. So those are the things I can look for in this. So let's go into the chart and see what we actually see. So you can see that here you can have market is bullish. Market was bullish into the fair value gap. Uh, this year we have a fair value gap here. We have a fair value gap here. Market entered into the fair value gap and buy. So market took out the liquidity. So we have a liquidity being taken out. Then market break the structure here, leaving with us a fair value gap. So market entered into the fair value gap. So I waited for market to reject on the fair value gap. That is where I put my entry and my take profits to the draw on liquidity zone. Don't forget, this is where I want to see the sell, and that is where I put my sell. So you can see if I want to use 1 to 2, I will have get my 1 to 2 here, and that will be the take profit. So you can see it from here. This is it here, and let me show you the end products. So let me show you the end product. This is the end product here. You can see it here. 165 pips. That's 2.63%. That's not a lot, right? So that's the way to trade. Having higher time frame context area is a very good and important thing before you even take a trade. Yeah, you have to have these things. So that's it. Don't forget to like, share, and subscribe. Thank you. For the next video, stay tuned. Yeah, right.